Hey everybody, it's Jimmy and Bill. So today what we're going to talk about is an interesting article that I read. It's not that I agree with everything, so,
Right.
but we're going to talk about it.
Right.
It's basically, this is the worst time now to buy a house, according to this article.
Okay.
Okay? Now, you're a realtor, so, I'm sure this is not like something you're really talking about.
But the truth is the truth at the end of the day.
It
and
is.
Everybody has their reasons for purchasing a home, not just the topics in this article.
And to my realtors that watch my videos, I'm not saying this. This is an article. So, but let's
dive in and see what's going on with this and see what the big hubbub is all about.
Okay. In the meantime, do me a favor. If you guys like this kind of content, consider subscribing. It really helps out the channel, and it's greatly appreciated. So, Bill, read the first one.
All right, high prices. According to the National Association of Realtors, mortgage costs as a percentage of the home buyer's total income have been rising since 2020. 14.7% in 2020 versus 27% in 2023. And the composite affordability index has been decreasing. In short, with the median home prices at $431,000, homes are too expensive right now for a lot of people to afford. You may be better off keeping money in your bank account and not overpaying for a house. Get expert advice on making more money. That's basically it. And then it's some randoms.
What do you think? True? Not true?
No, the statement is true.
Okay.
The affordability index is changed, because home prices over from 2020 to 2023, obviously we saw a huge increase in property values because of supply and demand. And that isn't going to change. We still have a supply issue. We can only build our way out of it over years, not just, not months. And typically when somebody sells a house, they buy a house.
Right.
Okay. So it's a net zero, and that's not going to help the problem. Now, some people obviously are selling a secondary home or investment property, but it's overall, generally speaking, that's not really going to help, the inventory issues and help drive down costs. So it's just because it's more money and because the cost of borrowing money is higher right now, the affordability has dramatically gone down as well.
Yeah, even building. Look at this house right here. You guys see that house? They got to build it on stilts now.
Right.
And if you notice, all the houses we're walking past now, they're not because of flooding. So that affects the affordability of houses.
Yeah, that drives things up.
All right, let me read the next one. Low inventory. While there are a few more houses for sale than there were in 2021 or 2022, housing inventory remains historically low with a few homes on the market. Prices remain high due to scarcity. All right. We're in the winter now. Okay, so seasonal adjustments. So there's going to be more. I have a feeling, because people are like, all right, I know I have a 3% rate, but I need to move with my job. I need to do this, I need to do that. So they're going to start selling. So I think low inventory, I think personally, my opinion is, and I'm not a realtor, is that's going to go away. I think there's going to be more choices for people to buy homes.
Like when you say that, you mean like in the realms of there's going to be more houses than buyers, so we're going to push towards more of a buyer's market versus a seller's market?
No, I think it's going to be a push. I think we're going to be stagnant on both sides. I think that there'll be more houses on the market, and there's always going to be buyers, but I don't think it's going to convert to a buyer's market, but I could be wrong. I just think that there's going to be more houses to choose from.
So the numbers are showing, just as far as housing inventory, we're still staying pretty stagnant as to where we have been. Even before the pandemic, we were right around, in our area here specifically, the Tampa Bay area, Tampa Bay, Hillsborough area, we were right around 3 to 4 months of inventory. And we're hovering around that 3 months of inventory now. And that was pre-pandemic. What we're starting to see now, so it makes it feel like there's more inventory and choice. Yes, you do. I agree with you 100%. There's more choice because houses aren't coming off the market so quickly and there's not as many buyers in the market right now.
Yeah.
So I don't think inventory has changed as much as we would like it to, but I think there's less buyers. And I think that, and I know that the time on market has increased back to a normal 30-ish days.
And now sellers are willing to negotiate and lower
Of course.
prices and do stuff. During the peak of the market, forget about it.
Right, we just went and looked at a house today, and that house was grossly overpriced.
Oh yeah, it was like 440.
Yeah, and there's really not much of a comp in the neighborhood that supports anything over 280, 300, give or take, depending on what gets done to the house. So it's those are the kind of things that just can't happen. But that house was also on the market for 190-ish, 200 days.
Yeah.
So
all right, go on to the next one.
well, we talked about high interest rates. High mortgage rates are keeping many would-be home buyers out of the market. So I'm not going to read the entire paragraph. We know interest rates are up, right?
But they're starting to go down.
But they're starting to soften, which is a good thing. Now, we're just coming out of prediction season, so maybe they go up a little bit, maybe they come back down a little bit.
They're not going to go back down to
they're
3%.
You took the words out of my mouth.
Yeah.
If we're waiting on the market to go back down to 2%, 3%, good luck.
Yeah, but
I just don't see that
This
happening.
article is kind of applying that. Wait till rates go down. If you're waiting for that,
Well, right, but are you waiting for rates to go to 3%? Or are you waiting for rates to go back to like what they were pre-pandemic, which was right around that anywhere 4.8 to 5.5?
and I think we might reach that, this year.
Slowly,
Yeah.
slowly. I think we're going to come down into the 6s. That'll normalize, open the doors for some other buyers. And as we don't want to go down too fast. We need stable. That's what we have to remind ourselves is this peak up, peak down, super fast. Stuff needs to stabilize. That's what makes the economy very, very turbulent. And that scares people.
Yeah. All right, high property taxes. Tax assessors have finally had a chance to update their property value assessments, increasing property taxes to correspond with higher property values. That means the monthly tax burden of owning a home has increased and might not be worth it right now to buy. Listen.
Well, okay.
What do you think? They're going to come? And
Sorry, we changed our mind. Look, we're going to do a reduction in taxes.
Well,
Come on.
something they have done reduction in taxes. When I lived in New York, they did a reduction in taxes during the crash because people asked for, hey, could you reevaluate my house? You're saying it's worth $400,000, and I think it's worth $300,000, and it does happen.
Right.
But you're talking about a long term. If you're waiting, say, if somebody's property taxes, we already know about how Florida taxes work. Forget about Florida, but nationally.
Yeah.
If somebody's taxes are $8,000 and you're like, well, I'm not going to buy it till the taxes are $6,000, $5,000.
You're not buying a house.
You're not buying a house.
Like, I'm just going to be direct. I hate to say never, but that just doesn't even make sense.
Number 5 is a good reason not to buy a house, I think. Go ahead.
Oh, so uncertain economy. So according to the article, we've been holding our collective breath for months, waiting to see if a recession will happen. Economic growth is projected to peak up in 2024 or 2025, but economists seem to be giving mixed reviews on what lies ahead. This may give homebuyers pause, urging them to wait for more certainty. I agree. Again, it goes back to what I said. We just need stable.
Yeah.
We need stable. And we've said this, I can't count how many times. If your job's not stable, if you don't know, if things aren't certain, stop spending money.
Yeah.
And now might not be the best time for you to buy a house. That's why it's important to sit down and talk with a professional so that it fits your needs, not what everybody else is doing.
And think about it. Think if your job is stable or not, or if you need 2 incomes and both of your incomes are stable before you buy. That could be a good reason not to buy.
Of course.
Okay. This one I agree with. Increase insurance rates. Okay. I'm not even going to read the paragraph.
Okay.
Insurance has gone through the roof. And I've seen deal after deal of, we just did a whole 2-part video
Yeah.
on insurance.
Yeah.
Okay? And I've seen deals die, not because of property taxes, not because of mortgage interest rates, just because of insurance rates.
Right. It's unbelievably important if you're purchasing a house to get insurance quotes during your inspection period. So the second somebody, the second you go under contract on a property, you have got to get an insurance quote. It may be more than you really think. Sometimes you'll see that realtors will put up what the current customer is paying for insurance. But just remember, everybody's insurance is calculated differently. So just make sure you get your own quote so that you're not shocked with the potential high cost of insurance that you may have. That's all I got to say about that.
All right,
we could be insurance like crazy. So
inflation.
Oh God.
You're tired of talking about inflation. You were just saying that.
I just said I'm so sick of talking about inflation. Of course it lands on me, but that's okay.
All right, go ahead, read it.
Inflation, I got to rip the Band-Aid off.
Yeah.
Inflation has eroded the purchasing power of Americans in the last few years. While prices have stopped rising at such astronomical rates, they haven't gone down much. With everything from milk to eggs to furniture increasing in cost, this leaves little room for the American budget to deal with the increased cost of owning a home.
I kind of agree with that.
I do agree with that.
That'd be a good reason not to buy a house.
Right. It just goes back to the affordability. Can you afford the house? It's not necessarily your principal on the loan, interest, taxes and insurance. You've also got maintenance issues, power, electric, all that stuff has gone up. So,
you know what? I'll give you the next one too. You're doing such a good job.
Oh my God.
I'm trying not to trip on this freaking sidewalk. This will be
Okay, I got you. Commercial buyers. So a forecast by MetLife Investment Management predicts that institutional real estate investors may control 40% of the housing market by 2030. We'll talk about that.
I kind of agree with that, but
yeah,
anyways.
It's a good topic. The families looking for housing on Main Street are facing increasing competition from Wall Street investors looking to bolster their portfolios. This is troublesome because real estate investment trust, or REITs, and other investment firms have deeper pockets than most consumers and can buy homes for cash.
All right. I think that big companies, investors, are going to buy up a lot of properties, and I think that a lot of people, especially millennials and stuff like that, it's going to be a renter society. But maybe it's a conspiracy theory on my part.
No, I don't think so. I don't disagree with that. I think we're heading towards that rental society, as they call it. We have to be careful. Now, the only other thing is, they're trying to put legislation in place that restricts the amount of homes that somebody can own in a portfolio without getting taxed a certain amount, to slow their purchasing down to allow for Americans to buy homes. Mm-hmm. So if that goes into place, there's mixed feelings on whether or not the government should be monkeying around inside, real estate portfolios and stuff. But in essence, this is just yet again another prediction, just like we're heading for a recession. We've been saying it for how long? Not us, but I mean, it's been said for how long? If you say it long enough, it'll eventually happen.
Yeah, a lot of YouTubers are,
yeah.
A lot of people think we're in a recession now. And maybe some days it does feel, for me, some days feels like I'm in a recession,
But when it comes to, institutional buyers, they do make up a very small percentage of the purchasing groups in the country. And in general, they've slowed down.
Yeah. All right, diminishing wages. Inflation wouldn't be such a big deal if wages keeping up with the rising prices. Unfortunately, that hasn't been the case. At the peak, price has risen 9.1%, where wages have risen 6.7%. Wage growth management outpaced inflation in the second half of 2023. But it remains to be seen if this can make up for the ground we lost earlier this year. So prices are going up, but people's wages are going up, but just not as fast.
Right. I mean, that's a true
there's
statement.
nothing more to talk about that. That's a true statement.
That's just, it is what it is. And, again, this goes back to like we've said, we've got to have this stable market. It's great to see your, real estate values go up a lot, but we don't want that because that affects us in other ways.
Yeah.
So those great gains have affected us
Yeah, I don't
in other
care
directions.
if prices crash around me because I'm not selling. I'll care when I'm selling. But anyways,
Yeah.
go ahead, read the next one.
Layoffs. So according to the article, over 305,000 people were laid off in 2023, and that's mostly just in the tech sector. While the volume of layoffs has slowed since the beginning of the year, they haven't stopped. If you fear that your job is on the chopping block or it's in a sector with a lot of job losses, you may want to hold off on buying a home until your job is more secure. I mean, that kind of goes without saying.
We talked about that
Yeah.
on the other one.
Yeah.
Okay, we're going to abbreviate these next few ones.
Yeah.
Existing mortgage rates.
Yeah.
You may have a 3% interest rate, and you want to sell. Maybe if you can afford the payment and you're comfortable, you just want that extra bedroom or something, but you're going to be going into a 7.5% rate. Maybe it's not time to sell. Maybe it's not a good time for you to buy.
Right. Or if it is, maybe, because you have equity in your home, that 7% is not such a big deal because you've purchased down your interest rate, or maybe you don't even need something to think about. You may not even need a loan, depending on if you're downsizing.
Yeah.
So that may not affect you at all.
Yeah.
But things to think about. And if you're going to move because of a life event change, you're not going to, not move or take a promotion or something along those lines because of an interest rate.
All right, so let's talk about this one. We can combine the next two. Low savings
Yep.
and too much debt.
Oh yeah, perfect.
All right, so basically, this is my opinion. I'm not a financial advisor or anything. I just think that if you can't pay off your credit cards and you're carrying credit card debt month over month, or you're stealing Peter to pay Paul from one
Yeah.
credit card to another, it's not smart to buy a house.
No.
End of story. I think that if you don't have a good savings and you're carrying credit card debts, I'm not talking about your monthly that you pay it off at the end of the month. I'm not talking
Right.
about that. I'm talking about you have $5,000, $6,000 on a credit card and you're sending a minimum payment. If you're
Right.
doing that, you can't afford to buy a house, and it's not a good time to buy a house.
I agree 100%.
All right,
Pending legislation.
go for it.
All right. Many states and the federal government have upcoming legislation that, if passed, could ease housing inventory and affordability problems we've seen in recent years. For example, the federal YIMBY Act could change zoning laws to allow for more affordable housing options, such as duplexes, manufactured homes, and more densely placed single-family homes.
Okay.
This could give home buyers more affordable homes to buy in the coming years.
Yeah, so if they change it, they change zoning laws, because we're short on houses.
Right. So where this could help people or hurt people, so maybe let's say they rezone something and it allows for an ADU, so you can you have enough property to put an extra little mother-in-law suite type thing
Yeah.
in your backyard.
Like California needs that.
Right. So now, but then you're not selling your house now, so you're not putting an inventory piece back on the market. But it could help. Or, I don't know if we could get any closer for some of these houses.
Yeah.
What's
the next one?
Next up is local home prices. So according to the article, in general, home prices have risen sharply from pre-pandemic levels, but certain areas that saw bloated home values during COVID are now coming back down to earth. Once hot markets like Washington, D.C., Utah, Idaho have seen 4 to 5% declines over the last year. If you're looking to buy on the West Coast or Intermountain West, and you believe these prices haven't hit bottom yet, you may be worth waiting to jump into the housing market.
That's true.
Yeah, this goes back to, you have to wait, you have to look at the market that you're in.
Yeah, because each market is different.
Everything is different. And then inside those larger markets, the micro markets are a little bit different and the sub markets are different. So that's where it's important. If you're wanting to move to a certain area, you need to figure out. So let's take an example local, because I know the local stuff. So like, if you're wanting to move to Clearwater, there's one thing. But if you're wanting to move to Wesley Chapel, it's a whole different market out there.
Yeah, night and day.
It's completely different.
And
You-
insurance rates too are different from those two rates.
Exactly. Everything is different. You know, home prices in Clearwater, you're buying older homes because they're just not doing as much new construction, not nearly as much. There's a few little communities here and there. But you go out to Wesley Chapel, it's the amount of new construction out in that area is insane. So those prices, you're competing against, you know, new construction is competing against inventory homes. So it's helping to balance out that market and keep things a little bit more stable, but it gives you choice.
At the end of the day, you know, depending on where you want to buy, it may be a bad time for you to buy.
Yeah.
But if you're in a place that the prices are a little depressed and you could afford it, but you still want to live there and everything, maybe it is a good time to buy. At the end of the day, you know, this article talks about why not to buy, but there may be a reason to buy, because just as easy as I found this article, 13 reasons not to buy,
We could do
the
it on
next page, there's an article, 13 reasons to buy.
It's down to you. That's what it boils down to. You know, if you have to move, if you have to downsize, if you have to upsize, you know, you got a few extra family members that came to live in your household, as an example, you know, you're not going to worry about saving 2%, because remember, you can refinance your house down the road. But if you're in a market where prices are continuing to climb, that's something you really need to look at, is not worrying, because waiting to save 1 or 2% on something that you can refinance down the road, but the home value went up 4 or 5%, the math just doesn't work out.
At the end of the day, look at your market.
Yep.
This article is about 13 reasons why not to buy. We'll probably do a video of 13 reasons why to buy, you know?
Right.
Honestly, but that's how it works out. Anyways, greatly appreciate it. Remember, consider subscribing. It really helps out the channel. Hit the bell notification, share this video, and we'll catch you in the next one.
Thanks. We'll talk to you soon.
Bye.